Welcome back to The Explainer. Today, we're cracking the code on a topic that absolutely mystifies most people, which is how to turn your cash into more cash, regardless of your current experience level. Accelerating your wealth creation isn't about just getting lucky. It actually requires following a very specific, sequential roadmap. We're going to look at the exact blueprint used by a multimillionaire angel investor who exited 3 different companies by the time he was 28. The whole secret? It's about mastering the 4 stages of investing for ultimate wealth: trading time, buying back time, letting money work for you, and owning equity.
Okay, let's dive into this by addressing the massive elephant in the room. Why do so many people who invest in the stock market actually stay broke? Or at least, never achieve true financial freedom? It's a pretty provocative question, right? Because we're taught from day one that buying stocks is step 1 of wealth building. But we really need to shatter that myth right now.
There's a quote from our source material that just hits the nail on the head here. Rich people don't start with stocks. There's actually 2 more stages before that most people completely skip. And honestly, skipping those foundational stages is the exact trap keeping so many aspiring entrepreneurs stuck and burning out. People get a little bit of extra cash, they want to feel rich, so they immediately throw it into index funds or real estate. But because they haven't actually built the foundation first, they aren't quite good enough at the game yet.
So to build that foundation, we're going to follow this strict 4-part roadmap. Stage 1, trade your time. Stage 2, buy back your time. Stage 3, deploy your money. And Stage 4, own equity.
Let's start right at the very beginning with Stage 1, trading your time.
Keep in mind, each rung on this wealth ladder is a strict prerequisite for the next one. When you're just starting out, you obviously don't have a surplus of money, but you do have time. Time is the very first resource you ever have to invest in yourself to get a return. So what does that actually look like? Well, it means using your drive time to listen to audiobooks instead of the radio. It means getting around mentors who are way smarter than you, keeping quiet, and just executing relentlessly so they actually want to pour more knowledge into you. It might even mean taking on low-pay projects just to get exposed to bigger ideas. All these actions stack your skills and build your reps. You're trading your time to become more valuable. But here's the warning. Eventually, you are absolutely going to hit a wall. Your money will start to pile up, but you will literally run out of hours in the day.
Which brings us right to Stage 2, buying back your time.
This is the crucial missing link you absolutely must master before you start blindly throwing money into the market. There's a massive difference in psychology at play here. The broke mindset is driving 20 minutes out of your way just to save 3 cents on a gallon of gas. You're spending your precious time to save a tiny bit of money. The wealthy mindset is the exact opposite. It's spending money to save time. Just look at Warren Buffett. The guy deploys billions of dollars to buy companies, literally using his cash to buy back all the time it took those founders to build those businesses.
If you want to do this yourself, you use a process called the buyback loop. First, you audit your calendar over the last 2 weeks. Second, you color code the whole thing. Green for things that light you up, red for things that drain your energy. Then, you evaluate the cost. Is it a $1 sign task, meaning it's super cheap to pay someone else to do? Or is it a $4 sign task that requires your specific high-level skills? Step 3 is taking all those low-value red and yellow tasks and delegating them. You transfer that schedule-clogging work to others so you can finally reach Step 4, which is filling your newly freed-up time with high-leverage, revenue-generating work.
Let me share a really cool anecdote from our source to show you the sheer power of this. By hiring an executive assistant to handle emails, scheduling, and professional interactions, plus a house manager to handle real estate and vehicles, our investor bought back 100 hours a week. 100 hours! That is time that can now be invested exclusively into activities that actually make millions of dollars. You aren't just hiring people to grow a business, you are hiring people to buy back your time.
Now we're ready for Stage 3, deploying your money.
Once you've successfully bought back your time, you can finally graduate to learning the skills needed to invest properly, like our source did. He took his newly freed up time to learn how to identify great entrepreneurs, which eventually led him to angel invest early in a company called Intercom. He put 0 time into operating it, but his money grew as the company became a multi-billion-dollar giant. At this stage, your dollars act like little potential workers. You don't want your money lazily hoarding up in a bank account doing nothing, right? But you also have to protect it. A great strategy for a professional capital allocator is taking 50% of your wealth and putting it into a don't lose it pile. Think boring, safe investments like the S&P 500 through low-fee index funds. That other 50% is what you actively use to reinvest in yourself, your business, and growing the things where you have an unfair advantage.
When you're allocating that capital, follow these 3 rules. Rule 1, invest in what you know.
Unless you have an unfair advantage because of your specific background, just skip it. Rule 2. Ensure it's always true. Focus on human fundamentals. People are always going to need housing, food, and experiences. Avoid fads entirely because that's basically just playing the lottery. And Rule 3. Play the long game. If someone promises you a 10x return in 6 months, walk away. Don't play short-term games with short-term people.
And here is a massive takeaway you need to remember. If you can't explain your investment in one simple sentence, stay away. Our investor actually learned this the hard way. He went to a seminar, got totally sold on this highly complicated medical supplies investment through a nonprofit that promised a triple return tax write-off. He hated paying taxes, so he jumped in. Well, 7 years later, he ended up paying hundreds of thousands of dollars in back taxes, all because he invested in something he couldn't simply explain. So, keep it simple.
Which brings us to the absolute peak of the wealth ladder. Stage 4, owning the equity.
Look, stage 3 is great. The stock market might get you a 10% return a year, and hey, it might eventually make you a millionaire by the time you retire. But if you want true, rarefied air freedom, we're talking millions generated every single month when you aren't even working. You have to own the thing itself. The crucial point here is summarized perfectly by this quote from Naval Ravikant. Wealth is created by owning things. Wealth is not created by working. You simply cannot work enough hours in the day to create Silicon Valley-level wealth without ownership. Showing up and just working harder simply doesn't scale.
To achieve that kind of crazy scale, you need equity. Equity is the only asset class where the upside is completely uncapped. Think about a business compared to real estate. If you buy a 32-unit apartment building, sure, you can do some value adds, get some nice tax benefits, but at the end of the day, it is strictly limited by its physical space. A business, however, that is growing without your daily operational input, that can scale infinitely.
Rich people don't rent wealth. They own their empire. Look at the Forbes list. 100% of the people on there made their money because they own the business they were in. And then they used that massive cash flow to invest in other businesses they also owned. The absolute best investment you can ever make isn't a stock or a piece of real estate. It's building a company that you could eventually sell. When you do that, and maybe you even hire someone else to run it, you are effectively stacking all 4 stages simultaneously. Each stage feeds the next one, and your swings just get bigger and bigger.
Let's wrap this explainer up with our final section, the ultimate wealth mindset.
As we bring this all together, we need to quickly pivot from the mechanics to the philosophy behind all of this. Because tactics and strategies are only going to go so far if you don't have the right foundation internally. And here is a pretty tough truth for a lot of people to hear. Your bank account is a lagging indicator of who you are. It directly reflects what you truly believe you are capable of and what you deeply believe you are worth. You never just get what you want in life. You get who you are. If you want to see different numbers in your bank account, you have to become the person who believes they are worth that wealth first, and then the money will inevitably catch up.
So what does this all mean for you? I'll leave you with this provocative thought to chew on today. Take a look in the mirror and ask yourself, who do you need to become to reach stage 4? Are you still stuck trading your time for pennies? Or are you finally ready to elevate, buy back your time, and start building your empire? Think deeply about that and start climbing those 4 stages.